Good day, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, the 9th of January, 2023. First announcement. I will be putting out updates for you tomorrow, but not any from Wednesday, probably and maybe even the weekend. My wife has taken me away for my birthday, making me go away. You know, I'm a workaholic, so I am going. For those of you that are my paid subscribers, I'm taking my computer with me. You will get your paid videos. I promise that. It would have to be where we're going, that there's no internet connection. And this time we're not going to Mexico, but it is somewhere else. And she's had this planned and sprung it on me and gave me no choice, which I appreciate. So, let's talk about where we're at. After we got last week's jobs week, as I want to call it, the JOLTS report, ADP, Challenger Gray, I can go on and on. It was just report after report on jobs. We saw a market where, for whatever reason, the people that analyze them, some people think that because you saw a slowdown, the word is a slowdown, in the rate of increase in wages, that was the turning point. Okay, a slowdown can lead to it, but you're not there. You haven't gone to a negative number, right? That's what you got to go to. And if employers are out there and the JOLTS numbers keep rising, which we won't know until February if they rise again, that means they're running ads, they're trying to hire people, and we see that those getting let go, we see it in the jobless claims, they easily are getting other jobs. We also see from Challenger Gray, Christmas, that corporate layoffs were lower. And we saw from ADP, that was the other report, that the private jobs right through the roof. They're doing fine. So it's the small and medium companies are doing their darn best to hire people. That leads us to the Fed. So today we saw a number of Fed members come out. Mr. Bostic was one of them. We saw Daly the other day. We saw Bullard come out, one after the other. Those that are coming out, they are not backing off. They think you have to go up to 5%, maybe higher, on interest rates, and you have to stay there for a long time. The thing that people aren't understanding is Jerome Powell does not want the legacy that Paul Volcker left us. When you hear Mr. Powell mention, and he's done it more than one time, that he has no intent of cutting back on rates only to have to raise them again, which is exactly what happened to Volcker. That will not be this man's legacy. Would you? If he keeps mentioning it, he's not going to do it. By the time he's the one that makes the decision, he gets the input from the other members, but what happens is his decision. He isn't going to have that legacy. You can bet against it all you want. I'll bet with what the man is about. And the man doesn't want the students in the future saying Jerome Powell, even though he knew what happened to Volcker, moved too soon. So what he's going to do is he's going to be late. How late to the party and how much damage that might cause? Okay. It also tells me, and I wrote over the weekend in my full research report telling people that, the last break low we had that took out the June lows of 2022 really went nowhere. Therefore, if so many people think on the next break that it will break because of whatever reasons and that it'll keep going down, I have my doubts. As a technician, I think we flushed out those stops. What's going to make it just march on down? It would have to be one thing. It would have to be CPI gets out of control and inflation just keeps going. So now you start turning your attention to this week's, and unfortunately I won't be here. I'm going to be on my birthday trip, as my wife calls it. You're going to be having to look at CPI and seeing the impact of that. If it slows a little, fine. If it slows a lot, it'll be even better for those that think the Fed will pivot. But if it slows not very much at all, be careful, because that'll get the Fed members and Mr. Powell come the February meeting. And remember, the FOMC meeting is February 1st. They're not going to get very, very what? loose at all. So I don't think that you start betting right now, well, the Fed, I heard today one person say, this Fed meeting is the last one they're going to raise interest rates at. I was watching it on CNBC again, and that's it. They don't have to go any further, and that's it. I heard the same person talking about the January effect. What happens in the first 5 days of January dictates the year. What happens between January 1st and January 31st, another tool. If you haven't read the Stock Trader's Almanac by Yale Hirsch, get it. You learn these different things that people look at. If it were that simple, we'd all be doing it, right? Now, the good news is about 85% of the time, those impacts do work. But the years you get it wrong, you get it very wrong. That's still a very solid part. So the first 5 days of the year were up as an aggregate. That is bullish, not bearish. Just bury it in the back of your mind, but remember it. And it's one of the things I looked at as I said, okay, that tells me on deep breaks, traders they're so anxious to be bullish. We've seen that all last year. That's not going to go away. When I look at the S&P, you can see you're down about 0.25% starting off the week. When we go to the daily chart, you had that big move up. And again, we held last week these previous lows at the 3,800 level. When and if that's broken on a closing basis, that's where you should get nervous because you open the door up for these areas down all through here, okay? You're not there at this point in time. You're in an area where you're starting to back off. Would I tell traders to buy that rally? The one thing I did this morning in both my subscriber video and in my written, I said, don't chase this rally. You're going to get caught if you chase this rally. And I got to tell you, if you take a look at today's action in the market, you went today from 39.73 and you closed at 39.17, near the lower part of the range. And if you bought, you got yourself in trouble pretty fast. It opened around 39.17, took off, you finished 39.13 under the opener, and people that were buying during the day thinking it's just going to go, I think they got themselves caught in a bad way. Also, I looked at where we're at. We came up, and I still think we're fighting resistance at the 18-day to the 100-day average of closes. And if you're going to keep going, then your target was back up at the 200-day. It just doesn't seem like you should be going to the 200-day moving average right now. And the Bollinger Band. I expect that Bollinger Band to start snapping down very quickly. In terms of momentum is up a little bit now, slowing down, but still upward momentum. So let's talk what we have. We have the bias up since we're over the 18-day average. We have momentum up, and we're void of a trend. You have a lower and low, higher high, and new money is just being deployed. This is the first full week of the market. Now, part of the January moves are that when people sell out of some of the Russell and some of the other indices, the theories go that in the first 5 days, they'll sell out November, and they come back into the market in January and they put their money at work. I don't know if it's true or not true. It's the theories that go with it. When you look at the NASDAQ, we've come back up and we're fighting a battle at the 18-day average of closes. We just had the Bollinger Band get back underneath the 100-day average, so it's going to probably come marching down towards that number. I wouldn't be surprised if these bands narrow in and you spin around in them a little bit right here. When we come to the Dow, you have a lower and low, higher high. You got within a hair's breadth of hitting the upper Bollinger Band, and you did set back on that. And in the Russell, you went up to the combination. What do I teach you? The first challenge of an area of a major moving average in a Bollinger Band, professional money likes to come out. And that's what happened. They came out there. So you had your up thrust. You had your, I know you're not going to agree, but you had your Santa Claus rally, a feeble one, but you had it by any stretch, any way you want to measure it, according to how it's measured. And now the market's giving you a pullback. I look for battle in all of these to try to get back to the 18-day average and give us setups very shortly that are tradable. That's what I'm waiting to see. When we come to the VIX cash, no follow through to the downside. It's still stuck at the 18-day average, and we picked up on that very quickly for you, and I think that's a good thing that we did. This is just spinning away, and a lot of people think, well, it's really not useful. Okay, I'm not sure they're right on that. When we get to the T-bond market, my eye goes right there. All I see is overbought. Overbought is a filter. In my charting course, the full course, I only use 5 indicators. 5. And the reason is each filters the other. What I'm trying to do is filter out reasons to trade. I know that sounds weird to you. I'm not looking for the trade. You know, you'll say, oh, I'm bullish, just looking at it. Should I go in? Now the filters tell you if you should or shouldn't. And the filters, because this is overbought, the trend is up, the bias is up, all that's there, it's saying it's overbought. No, that's simple. It's not hard. Then I go to the 10-year notes, same thing. Now, are we getting a bullish crossover? Certainly looks like it. The 18-day average just got over the 100. When I come to the dollar index, you went to the upper Bollinger Band, and I know what I'd tell you. That's where the pros come out. What'd you do today? You went to the lower Bollinger Band. What would I tell you? That's where the pros are going to cover the shorts. The market normally doesn't go from upper band to lower band. I believe this is still part and parcel of coming out of the Christmas, New Year's holiday and getting the early reports on labor, and now we're going to deal with one thing. What's that thing? CPI on Friday. We already know what labor is. The market's made up its mind that the fact that the rate of wages isn't going up as much as it did means they're peaking out. Whether that's real or not, that's what the market thinks. The next leg that the market needs is inflation beaten and going to come marching down, or is it going to dribble down, or is it coming down at all? Well, I think we'll get a pretty good idea on this Friday's report. Unfortunately, I will be out of town, unable to tell you about it, but I will for my paid subscribers. They will get the info from me. In the eurocurrency, it's the same thing as the dollar, just a flip-flop. Remember, they're mirrors. 40% of the dollar index weight is made of the eurocurrency. You went to the lower band, now to the upper band. Look for the market to now figure out next what's going to happen. Currencies are my favorite market, and none of them have setups that make any sense right here. And the hardest thing to do when you're being paid, which I am, by my subscribers to give them trades, is to put out no trades at all. If you think that's easy, you are so wrong. I used to bend to their will. Now I just bend to my own will. And the reason is they're paying me at least to give them the best that I have. Doesn't mean I'll be right. And my work says, no, you don't trade in that setup. Bitcoin is bullish, but overbought. Would I tell you to buy a reading that's overbought? That isn't going to happen. Then we take a look at Brent versus March WTI. Well, you can see it's coming down. And I have switched gears now. All of the different energies that I'm following now should be the March. So I've left the February already. I'm a little bit early, but not much, and moving to the Marches. When you look at this pattern, you have a higher high, lower low, sort of meandering around, and you're oversold. That's not a setup that makes sense to me. When I come to March WTI, higher high, lower low, same thing, and oversold. When I come to March, that should be heating oil. I just have the wrong title. So don't let me confuse you. HOH is heating oil. I must have been drunk when I did that this morning. I'm laughing, I'm teasing, of course. My mind must have got on something. This is still in a downtrend, though. Lower highs, lower lows. Again, it's heating oil, not crude oil. I'll fix that in 1 minute here. And in the nat gas, as you can see, still down. Now, I was telling my traders today, if you take the enhanced Bollinger Band course, was a sell day. I went through the whole thing. I explained one of the problems I'm having, and I've learned a lot, is when you come from a market that was just up here and straight down, sometimes I elect not to make those trades. And the reason is how much downside is there really left in the market. And you have to learn this over time. You have to learn sometimes and not kick yourself. I should have taken that. I should have done this. You don't have to do anything. If you take no risk, you lost nothing. You'll say, well, I didn't gain anything. Sometimes you get that big of a break. I'm not bottom picking. I've seen this over time. That sets up, all of a sudden, you get that spike you weren't ready for. That's all I'm saying. If you took it, I said trade it very lightly. Be sure you don't let it get away from you, and you're still looking for 285 roughly. That's a pretty deep number to be looking for a profit on that particular market. So that's what I try to do. Now, today was a day where I tell you, I was watching pivot points. I must have hit them 50 times today on different markets. I was looking like anybody. Am I missing something? Should I be telling my subscribers what to do, how to do it? And I didn't see things. Now, understand what a pivot point is. There is a formula that I teach in here. And by the way, you have this probably automated on your charting software, even if you don't use mine, that finds via the previous day's daily range, daily, hear this, the midpoint. And then the formula finds sell points and buy points. I tie it together with slow stochastics, my formula, not the formula that you're probably using. Mine has a modification that my paid subscribers, if they write me, I give them the formula, they go in and they make the change. It's pretty simple. It's not where you put in, oh, give me a 5 and a 3 and a 14 or an 18. It's inside the formula. You have to make a change. And I give you the whole code, so if your charting software allows you, just write a special slow stochastic formula, call it your name, stochastics, and you got it. And just apply that on the chart. You're working with the same numbers I have. And you're looking for that to get your edge in the market for buys and sells. I'm trying to go with the trend, so I'm looking on the pullbacks or the rallies if I'm going short to play with it. How do you get all this? Well, go to my website, iraepstein.com. It's pretty simple. Under free offers. We've had a trouble with TubeBuddy. It's not us putting up the right through here, the icons that you can click. I don't know if they'll work. If they don't, you go to iraepstein.com. If so, you'll see them up there. And you can always call my staff. They'll get it for you. I'm Ira Epstein. I will be here tomorrow. I'll be saying goodbye for a few days. I appreciate my wife very much taking me away. I don't go away very often. She's always saying that because I love working. You have a great day. I'll talk to you later.